You probably all heard that. This conference is being recorded. Um, you will have two ways of asking questions. If you look in the upper right corner of your screen, you should see a little gray flag icon. You can either click that and that raises your hand, and I can unmute you and you can ask your question over voice. In order for that to work, you need to make sure that you have a microphone on your computer and or you have called in using the phone number. If neither of those applies to you, or if you prefer, you can type your question. And to do that, you look in the bottom right-hand corner and there's a little comment box. It looks like a rectangle with a little speaky square, sort of like a speak bubble. You can click on that and then you can type your question into that window. We'll be taking questions at the end, but feel free to enter your question at any time, and we'll get to all of them at the end. Otherwise, if you have any technical difficulties, you can also use that chat box for those. So thank you for joining us and welcome to our Tax Day 2015 webinar. Do you know where your taxes went? So we'll be going through our 7 things you should know about taxes with some information on each of them. The first thing, of course, is that you're an investor and your tax dollars come back to your community. And here you can see you should be able to find your own state. This chart shows for each of the 50 states and the District of Columbia how much of state revenues come from federal sources. And this does not include money that goes directly to people in your state. So this isn't looking at things like Social Security, where a check comes directly from the federal government into someone's mailbox. This is really money that comes directly to your state government. What it does include is education assistance. It includes grants that go to states for things like Medicaid and public assistance, so welfare, and programs like that that run through states and then to those states' citizens after that. As you can see, Mississippi has the largest share in the nation of state revenue from federal sources with 43%, and North Dakota has the lowest with only 19% of their state revenues from federal sources. What this also doesn't show you is money that goes from the federal government direct to local governments. And there's quite a bit of that in a lot of these states too. So pretty much no matter who you are or where you live, there's a lot of federal money that's coming right to your community to do things like fix roads, pay for schools, and generally make your community a decent place to live. The second thing, of course, is that in addition to receiving the benefits, you pay these federal government bills. Here you'll see a breakdown of all federal tax revenue from 2015. Over on the right, the biggest blue piece is individual income taxes. And that's what we'll be focusing on the most today, of course, in honor of Tax Day next week. The individual income taxes are what we all fill out our returns and figure out how much we owe or how much we don't owe. And that comes in at almost half of all federal revenues, 47%, or almost $1.5 trillion in 2015. The next biggest piece is payroll taxes, which are what we all see on our pay stubs. If we work at an employer that withholds these payroll taxes, they appear as FICA or they appear as Social Security tax or Medicare tax. And those taxes go to fund exactly those things that they're identified for. Social Security taxes go to pay for Social Security. Medicare taxes go to pay for Medicare. And those are really the two biggest payroll taxes that we pay. Those go to pay for those dedicated programs. And those are not part of what we look at for Tax Day, since your IRS return doesn't count up those things for you either. That comes in at about 1/3 of all federal revenue, though, at just over $1 trillion in 2015. And then after that are smaller sources like corporate income taxes, which is only 11% of all federal revenues in 2015. And we will be looking at some of these other things today in comparison to individual income taxes to see how the federal government pays its bills. Here you can see how the proportion of all federal revenue that comes from individual taxes versus corporate taxes has changed over time. So the blue line up above is individual taxes, and it shows you what percent of all federal revenue has come from individual income taxes over time. And you can see, as we saw in the last chart, it's up to almost 47% in 2015 of all federal revenues come from individual income taxes. That hasn't changed a whole lot since about the 1940s. But what has changed a whole lot is the percent of all income, of all federal revenue that comes from corporate income taxes, down to just below 11% now, whereas if you look back to the mid-1940s, it was up at almost 40%. So there's been quite a lot of change there, and later on in the presentation, we'll look at some of the corporate tax loopholes and breaks that have contributed to that decline. So the real distinction that we're making when we say we're going to look at our income taxes is between what's called federal funds and trust funds. So when you pay your payroll taxes, those taxes like FICA or Social Security or Medicare that I referred to earlier, those go into trust funds. So there's a Social Security trust fund that your Social Security taxes go into, and that only pays for Social Security benefits. Likewise, there's a Medicare trust fund that your Medicare taxes go into and that only pays for Medicare benefits. So we separate those out for tax day because they're paid through payroll taxes, not income taxes, and because they really are their own separate funds that pay for those programs. And here, just so that you can get an idea of how much that is, I've shown some of the biggest trust funds compared to federal funds, which is the big pot of money that all of our income taxes go into, and corporate income taxes as well, go into one big pot of money that's known as federal funds, and that funds a large share of what the government does. So you can see here in yellow over on the left, the Social Security Trust Fund and the Medicare Trust Fund are huge pieces of what our government draws in to pay for Social Security, unemployment, labor, and Medicare and health, respectively. The other sort of significant piece of yellow that you'll see is over in transportation. And one example of that is the Highway Trust Fund, which is, again, another dedicated source of funds that comes from gas taxes that the federal government uses to disperse to states and localities to pay for highway repair and bridge repair and similar things, which is also under threat, but given that it's so small compared to Social Security and Medicare, it's not one of the biggest trust funds that our government operates. So from this point forward, when we talk about how our government spends your tax dollars and things like that, we'll be talking about federal funds, the blue parts. So we'll be talking about, even though you pay lots of payroll taxes for Social Security, we'll be talking about the portion of your income taxes that makes up that blue part, that's federal funds. And here, in a nutshell, is where those blue federal funds go. When you pay your income taxes, this is what your income taxes are buying. And you can see up in the right-hand corner, the dollar graphic. It has the same information as the bar chart, but the bar chart may make it a little bit easier to compare some of these things. So the biggest piece of where your tax dollar goes is to the military. This 27 cents of every income tax dollar that you pay goes to the Pentagon and related spending. That doesn't include veterans benefits, which you'll see a few bars over to the right at 6 cents out of every dollar. And it does include is military personnel, it includes military technology and equipment, it includes things like nuclear weapons, it includes all of the operations and maintenance of the various armed forces. But like I said, veterans benefits is separate. It's at 6 cents a dollar over on the right. The second biggest piece is healthcare, which comes in at a little more than 26 cents out of every dollar. And that's driven to a large degree by spending on Medicaid. The third biggest piece, at 15 cents out of every dollar, is interest on debt. And then you can see the remainder of the dollar, which is less than half of the dollar, goes down from there. You can pick out that actually less than 3 cents of every dollar of your income taxes goes toward education and some of the other categories as well. And I'll break some of these down into some additional pieces that may be of interest. So one tool that we offer at National Priorities Project is the ability to get either your own personalized tax receipt on our website or to see an average for the US or an average for your state. So here I've pulled some of the information from a US average tax receipt. So the average US taxpayer in 2014 paid about $12,922 in income taxes. And out of that, over $3,500 went for Pentagon and related expenses. Now, only $759 of that Pentagon and related expenses total went toward military personnel for things like pay. $88 of that total went for nuclear weapons. So much of the other spending goes towards things like operations and maintenance and procurement for the armed forces. Out of that almost $13,000 in average tax paid, about $1,500 would go to Medicaid. A little over $750 would go to veterans benefits. About $389 would go to SNAP, the Supplemental Nutrition Assistance Program, or food stamps. About $329 would go toward education. About $83 would go to welfare. $47 for Children's Health Insurance Program, $43 for diplomatic and consular programs. Those are diplomatic programs largely at the State Department. $34 for the federal prison system, and only $11 for energy efficiency and renewable energy. I think some of this information is probably surprising to your average taxpayer who might think that a program like welfare, for instance, was a lot more expensive than that. If you think of spending only $83 a year to support welfare recipients for the average taxpayer, that's not a huge expense. So that's where our average tax dollar goes. But the next thing you should know about taxes is that we don't all pay equally. So one thing that has been noticed increasingly in recent years is the extent to which the very top earners in our country have been paying a lower tax rate than they used to. Over on the left here, that chart with the red and orange, you can see tax rates paid by the wealthiest Americans. And if you look at that top segment, the darker red, the top 0.1% of earners, their average tax rate has gone down from about 50% in 1960 down to closer to 30% today or in recent years. So they're now paying closer to what the regular old top 1% are paying. Meanwhile, the middle 20% is not paying that much less than that as an effective tax rate in the mid-20s, mid-20%. So something that's gained increasing relevance over the last few years but has not yet become a part of our actual tax policy is something known as the Buffett Rule. And the Buffett Rule says that no household making over $1 million annually should pay a smaller share of their income in taxes than middle-class families pay. It's targeted at basic fairness and making sure that we're all paying for our share of what our federal tax dollars go toward. The other example of how we don't all pay taxes equally is corporate tax. Now, this touches on our next topic, which will be tax loopholes and tax breaks. But what this shows you is, according to a 2013 report from Americans for Tax Fairness, these are the top 10 corporate tax dodgers. And the criteria to be identified as a corporate tax dodger were things like holding profits overseas so that they would be exempt from US taxes, things like receiving US subsidies while holding those tax dollars overseas, receiving federal contracts while holding your profits overseas, and the effective tax rates that certain corporations paid. So for instance, Bank of America in 2013 had, or in 2012 rather, had held $17 billion in profits offshore on which it paid no US taxes. Bank of America also reported that if those profits had been brought back home to the US, it would have owed $4.3 billion in US taxes that it managed to avoid paying. And other corporations on the list have similar stories. Citigroup had almost $43 billion in profits that they held offshore in 2012, on which they paid no US taxes. They reported that they would owe $11.5 billion in US taxes if their profits were brought home. And then there are the companies that paid various seemingly low tax rates. While the official corporate tax rate in the US is 35%, ExxonMobil in 2010 to 2012 reportedly paid just 15% income tax rate on their profits. And they also held $43 billion in profits offshore. FedEx reportedly had a profit of almost $6 billion from 2010 to 2012 and paid nothing in federal income taxes. So that would be an effective tax rate of 0%. And other corporations had similar stories. Some of them had tax rates as low as 2 to 3%. Many of them had billions of dollars in profits that they held overseas, which were exempt from US taxes. So there are lots of ways that corporations get out of the official 35% tax rate and end up paying a lot less than that. Which brings us to tax breaks. Our tax code is full of tax breaks. So here you can see a cartoon about tax cuts for the rich, of which we've had quite a few over the last decade or so, compared to corporate loopholes. Now, this is not exactly an accurate necessarily representation. I'm not quite sure how they drew the sizes there, but you get the idea. This is an accurate representation. And what this shows you is for fiscal year 2015 that tax breaks were $1.24 trillion, and all discretionary spending by the federal government was $1.16 trillion. So in other words, we're spending more money as a nation to give tax breaks to both individuals and corporations than we're spending on all of our discretionary spending combined. And that discretionary spending includes major spending categories like all of our military spending, all of our education spending, spending on science, spending on to a large degree on healthcare, on unemployment and labor. All of that spending together is smaller than what we spend on tax breaks. Here you can see a trend of corporate tax breaks over time, going back to 1974 and with a projection forward for a few years. But at 2013, there were $176 billion in corporate tax breaks that our government handed out. And this has gone up, as you can see, over recent decades. Individual tax breaks are also significant. Some of the biggest individual tax breaks are here. And what you can see here are 5 of the biggest tax breaks for individuals, how much they cost the US Treasury in 2013, and how much of those tax breaks went to people who were earning the top 1%. Sorry, we'll go back. Apparently the slides have not been updating. So I'm going to back up a couple of slides. Back to so here's the iceberg slide. Here's the slide when I spoke about tax breaks being larger than discretionary spending. So as I said, tax breaks in 2015 were $1.24 trillion versus all discretionary spending for programs like the military and education and science came in at $1.16 trillion. And here you see the cost of corporate tax breaks over time. Now, as of this projection, these were expected to continue to increase for the next few years as well, despite being $176 billion for corporate tax breaks in 2013. Now you should be seeing the slide that shows the top five, not the top five, but top five of the top tax breaks for individuals. And as I was saying, you would see here the 5 tax breaks themselves, the cost to the US Treasury, and how much of that tax break goes to the top 1% of earners in the United States. So the biggest tax break that goes to individuals is the exclusion of employer-sponsored healthcare. And we say that goes to individuals, but what it does is it lets employers not pay taxes on their portion of their employees' health insurance. So if you have an employer who provides you health care, that employer gets a tax break. We still say it's a tax break to individuals because it's assumed that that benefit really comes to you in the form of your employer deciding to give you health care. The cost to the US Treasury of this tax break is $191 billion in 2013, and only 2% of it goes to the top 1%. Now, that's still more than 1% of it going to the top 1%, but it's not quite as bad as the others, as you can easily see. The next biggest is the special rate on capital gains and dividends. So capital gains and dividends, which are investment income from things like investing in stocks and bonds or real estate, are taxed at a special rate that's different than other income, a lower rate. And the value of being taxed at that lower rate, that costs the US Treasury $97 billion in 2013. Now, of that $97 billion, 68% of it went to the top 1% of earners. It's largely because a lot of lower income people don't necessarily have capital gains and dividends to earn that lower rate. So this is really the worst offender when it comes to tax breaks that benefit the well-off, but not the rest of us. Third, you'll see the exclusion of employer-sponsored retirement plans. This is similar to the employer health insurance. If your employer gives you a retirement plan, that is not subject, those contributions are not subject to tax. And that tax break is worth $91 billion to the US Treasury. 14% of that went to the top 1%. And while that's not quite as bad as 60%, 14% of that tax break going to the top 1% of earners is obviously a lot more than if their share were 1%. Similarly, the deduction of home mortgage interest, which a lot of taxpayers are probably familiar with, it's a much more commonly taken one and something that actually appears on your tax return. That one is worth $71 billion to the US Treasury, and 15% of it benefits the top 1% of earners. Finally, there's the deduction of charitable contributions, which you would also see on your tax return if you itemize, which is worth $50 billion to the US Treasury in 2013, and 38% of that benefits the top 1% of earners. But there are some tax breaks that go specifically to working families. For instance, the biggest one of those is the Earned Income Tax Credit. Through the Earned Income Tax Credit in 2012, $64 billion went to working families. And here you see a chart that shows you the income breakdown of the families who got that credit. So almost half of EITC recipient tax filers in 2012 earned between $10,000 and $25,000 a year. Now, just to put that in some context, the median household income for the United States right now is about $50,000. So that means that about half of all US households earn less than $50,000 and half earn more. But about half of EITC recipients earn between $10,000 and $25,000. When you look at even lower income, you see that 27% of EITC recipients earned between $1,000 and $10,000. So put those together, and almost 3/4 of EITC recipients were below $25,000, which is less than half of the median income for the United States. Then the next group is almost about 1/4 of EITC recipients earned between $25,000 and $50,000. There were a few EITC recipients whose income was between $50,000 and $75,000, but not even quite 1%. And about 1% of EITC recipients had income that registered at under $1, which may mean on filing income taxes either that people had no income, or that their adjusted income for income tax purposes may have actually been less than zero. So the real takeaway here is that almost everybody who gets the EITC has an income below $50,000, or in the bottom half of the income distribution of the United States. And in most cases, far below the bottom half. Another major tax credit that goes to working families is the child tax credit. This was worth $28 billion in 2012. And here you can see the income of recipients of the child tax credit, which is a little bit more distributed across the income spectrum than EITC was. So for the child tax credit, folks who earned under $1 up to $10,000 were less than 1% of recipients. 10% of recipients earned between $10,000 and $25,000. A little over 1/3 of recipients, 35%, earned between $25,000 and $50,000. Almost 1/4, 23%, earned between $50,000 and $75,000. And 17% earned between $75,000 and $100,000, while 15% earned between $100,000 and $200,000. After that, the child tax credit phases out quite quickly with income. So the percentage of people who got the child tax credit with incomes over $200,000 is less than 1%, because there's a very narrow income range above that that qualifies for the child tax credit at all. And just to put that in a little bit of perspective, a little more than $200,000 puts you in the top 5% of earners in the United States. So this is a tax credit that's really available to the vast majority of Americans who have children. Now, one thing about this tax credit is that currently you can get up to $1,000 back from this tax credit. Some of the tax proposals that were put forth as part of budget proposals over the last month or so, which you can see in our competing visions analysis, proposed raising that amount considerably up to $3,000 maximum credit. Other tax proposals under consideration, the House and Senate proposals in particular, proposed allowing expansions to both the EITC and the child tax credit to expire in 2017. And what that would mean effectively is that the government would hand out less money for these tax credits for working families, and a lot of the families that you've seen in this income distribution would fall off and no longer be eligible for those credits. Or they'd be eligible for a reduced amount of those credits. Meanwhile, while that specific proposal appears in the House and Senate budget proposals, they both also call for tax reform and closing tax loopholes, presumably for other individuals or for corporations, but they don't specify what any of those would be. And last, tax breaks are often inefficient means of accomplishing what they're supposed to accomplish. And that's relevant because while we think about tax breaks as being one means to an end, we can also think about regular government spending as being another means to an end. So think about the home mortgage interest deduction, something that is very popular and a lot of people take it. A lot of homeowners itemize their taxes and take the home mortgage interest deduction. And that costs the government $71 billion. Now compare that to the total discretionary spending for housing and community programs by the federal government in 2013, which was only $63 billion. And it's worth asking the question, given that we know that about 15% of that mortgage interest deduction goes to the top 1% of earners, is that the best way to encourage home ownership? Or might there be other programs through more traditional government spending that might also do the job better and target the help to who needs it most? And along those lines, here are what some Americans have said recently about how they feel about taxes. Now, I found it somewhat surprising that a little more than half of Americans actually think they pay about the right amount in income taxes. 53% of Americans in a poll from just February said that they pay about the right amount. Of course, 40% said that they pay more than their fair share. And interestingly, 4% said that they pay less than their fair share of income taxes. So it sounds like there are some folks out there who are open to paying more. And then over on the right, you can see, according to the same poll, how Americans feel about how much everyone else is paying in taxes. And as it turns out, the vast majority of Americans feel that some corporations don't pay their fair share of taxes. And if you think back to what we saw about the fact that corporate income tax makes up a smaller percent of all federal revenue than it has in the past, and the value and the way that some corporations have avoided paying taxes, that probably makes a lot of sense. Similarly, a vast majority of Americans feel that some wealthy people don't pay their fair share of taxes. And looking at who benefits from our corporate tax code and the tax breaks that are in that tax code, that also probably makes a lot of sense. Interestingly, when you look at who is bothered by the amount that they personally pay in taxes, the fourth item down in the bars on the right, that's about half and half. People who are bothered a lot or some by the amount that they personally pay. But there is a lot of agreement that among Americans that corporations and the wealthy don't pay their fair share. Finally, if you want to get your own personal tax receipt, you can do that at our website. You can use the link at the bottom of the screen there, that bit.ly/NPP Tax Day, or you can go to our website at nationalpriorities.org and click to get your personal tax receipt, where you can enter the amount of federal taxes that you personally paid from your income tax return. Or you can also see the average tax receipt for the US that includes the categories I spoke about, plus some others. Or you can look at the average tax receipt for your state. So there is some variation in how much taxes, what the average tax receipt is by each state. And you can look at the state you live in and see for that state how much of the average tax bill goes to the military, to education, to food stamps, and other programs like that. And that brings us to the end of the slideshow. I'm not seeing any questions so far, but if you have questions, again, you can either go up to the top right corner and click the flag to raise your hand, in which case I can unmute you to speak your question, or you can go to the bottom right corner to the box and click to chat to type your question. So I'll hold for a minute and see if any questions come up. Okay, we have a question from someone. Diane, I believe I've unmuted you. Diane. Not able to hear Diane. As I said, if you are going to speak a question, you'll either need a computer with a working microphone, or you need to be called in via the phone line. Diane, if you're having problems, you might want to try typing your question using that chat icon in the bottom right of your screen. I'm going to give one more try for Diane. Hello? Okay. We're going to move on, but Diane, hopefully if you can either type your question into the chat box or type to let us know if you're having some kind of trouble, we can try to figure out what's going on. Are there any other questions? You can either raise a flag in the top right corner or click the comment box and type a question in. Okay, I'm sorry about that to Diane. It doesn't look like we have any other questions right now, so I will encourage folks, if you do have a question for afterward, or for Diane, who we weren't able to get to, if you would like to use my email address and send your question via email, I can definitely get you an answer that way. Otherwise, thanks very much for joining us. Definitely go to our website at nationalpriorities.org and check out the tax receipt and the 7 things you ought to know about taxes there. And thanks for joining us.